Bitcoin is not just falling because of fear, it is falling because capital has found a louder story. While Bitcoin is struggling near a key psychological zone and spot Bitcoin ETFs are seeing heavy outflows, AI memory stocks are suddenly exploding back into the center of Wall Street's attention. This morning, the real question is not whether Bitcoin can bounce, but whether Bitcoin is losing the liquidity war to artificial intelligence. The trigger came from Micron, and the message was hard to ignore. After strong earnings and guidance, Micron surged more than 15%, reminding investors that the AI infrastructure build-out still needs memory, storage, servers, and chips. Semiconductor names caught a fresh bid, and the AI trade started to look alive again, even while the broader market was far from perfectly bullish. That split is important because Wall Street is no longer buying everything. It is choosing very specific winners. At the same time, Bitcoin is not getting the same treatment. The price is weak, the bounce looks fragile, and ETF flow data shows that institutional demand is under pressure. When spot Bitcoin ETFs bleed hundreds of millions of dollars in a single day, that is not just a chart problem, that is a liquidity message. At the calm metrics, we always come back to the same idea. Price is the surface, but liquidity is the message underneath. And right now, that message is uncomfortable for crypto bulls. If AI stocks are attracting fresh capital while Bitcoin ETFs are losing capital, then Bitcoin is no longer acting like the obvious leader of the risk-on trade. Investors are not simply asking, is Bitcoin cheap? They are asking, why hold Bitcoin here if AI earnings, AI chips, and AI infrastructure are giving Wall Street a stronger story to buy? But this is not a clean AI victory either. Apple was hit hard after raising prices on Macs and iPads, and that tells us something deeper about the AI cycle. AI demand may be bullish for memory suppliers like Micron, but it can also push costs higher for companies that need those same components. In other words, AI is not only a growth story, it may also be turning into a cost story. That is why this market feels so strange. One part of technology is celebrating the AI build-out. Another part is being punished by the cost of that build-out, and Bitcoin is stuck trying to prove it still deserves liquidity. The Federal Reserve backdrop only makes this harder, because inflation is still too high for the market to assume easy money is coming back quickly. When liquidity is not free, capital becomes selective, and selective capital can be brutal. So the signal this morning is simple. AI is getting paid, Bitcoin is getting tested, and Wall Street is choosing where the next dollar goes. If Bitcoin can reclaim strength while ETF outflows slow, the story can change quickly. But if AI keeps pulling attention and capital away, Bitcoin may not just be fighting resistance on a chart. It may be fighting for relevance in a market where the loudest growth story is no longer crypto, it is artificial intelligence.